The value of education loans taken in FY23 has grown 20% as of July, according to the RBI. Now, this as a larger number of students opt to study abroad amid higher fees and higher cost of living. The shares of these loans in overall personal loans, however, remains low. Ritu Singh is standing by with more details. Ritu.
Since FY22, education loans have registered a sharp rebound, even growing in double digits, but this comes on a low base. Now, the outstanding bank loans to the education sector increased to 96,800 odd crores as of FY23, registering a 17% plus growth year on year, and they've already crossed 1 lakh crores as of the first 4 months of this financial year, growing by almost 20%. So what explains this sudden spurt? Well, apart from the low base, keep in mind the demand for offline courses, both domestic and overseas, has been rising, especially post-COVID, and more so for overseas courses. The number of students, for instance, availing education loans to study abroad has increased by 215% in the last 10 years, and more than a third of the current education loans outstanding have been disbursed for education overseas. Higher inflation globally also means higher tuition fees, higher cost of living, and hence larger ticket sizes of education loans. There's also growing demand coming in for higher education from Tier 2 and Tier 3 cities, which is driving the growth, and NBFCs have also become larger players in this market. Now, if you look at the asset quality, education loans registered one of the highest default rates among key personal loan categories for banks at around 5.8% and higher for public sector banks. But is that a reason to worry yet? Well, banks we spoke to said they don't think so, because it is still small in absolute terms and their share in personal loans overall has remained stagnant and low at around 2% or so. But if you look at other segments of personal loans as well, you'll see auto loans, credit card receivables, for instance, have been growing much faster.
Right, Ritu, thanks a lot for that. Let's refocus.